a wild ride right now. I've been at this for a long time. First bought gold back in 1978 when it was around $180, $163 an ounce, I forget. Never have I seen it take off like this. It's the great concern, economically and geopolitically. Too many wild cards. And where it goes, nobody knows. But as we see it, it's only going to get much worse.
In today's news recap, gold soars past $3,200 as trade war deepens, dollar loses ground. Gold blazed past the $3,200 mark on Friday as a faltering dollar and an escalating U.S. China trade war stirred recession fears, sending investors flocking to the safety of the yellow metal. Spot gold was up 2% at $3,236.67 an ounce after hitting a record high of $3,243.82 earlier in the session. Bullion is up over 6% this week. U.S. gold futures climbed 2.4% to $3,253.20. Gold is clearly seen as the favored safe haven asset in a world upended by Trump's trade war. The U.S. dollar has depreciated, and U.S. treasuries are selling off hard as faith in the U.S. as a reliable trading partner has diminished, said Nitesh Shah, commodities strategist at Wisdom Tree. China increased its tariffs on U.S. imports to 125% on Friday, raising the stakes in a confrontation between the world's two largest economies. The dollar fell against its peers, making greenback-priced bullion cheaper for overseas buyers. A combination of central bank buying, U.S. Federal Reserve rate, cut expectations, geopolitical instabilities, and a surge of investor flows into gold-backed ETFs has also supported gold's rally this year. U.S. monthly producer prices unexpectedly fell 0.4% in March, but tariffs on imports are expected to drive inflation higher in the coming months. Traders now bet that the Fed will resume cutting rates in June and see around 90 basis points worth of cuts by the end of 2025. A minor correction for gold wouldn't surprise, but the path forward is up and away as CPI and PPI gives the Fed more room to cut and will keep downward pressure on the dollar, said Tai Wong, an independent metals trader. Spot silver gained 2.7% to $32.05 an ounce, while platinum added 0.2% to $939.80. Palladium advanced 0.6% to $191.50, $913.65. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Bitcoin is down today at 79,000 range. Here's the deal, man. And again, it's a wild card. We've been bullish on Bitcoin since 2017. So a lot of people a lot bullish that before us, but we're the same when we did it. We tell you we don't bullshit. And we've been very bullish on Bitcoin. But now gold is outshining Bitcoin. But with the crypto club in the Trump administration, you don't know where this thing's going to go. And Brent crude was down today almost 3% at $63 a barrel for Brent crude, which means that that's going to bring down gas prices, and that's going to be positive for Trump in terms of the tariffs. And again, I want to bring manufacturing back to America. That slimeball Bill Clinton gave us NAFTA, taking it out, bringing it to cheap labor, and brought China into the World Trade Organization. And again, We're on a wild ride. Wild, wild ride. Been at this a lot of years. Never seen anything like this one before. Stocks fell on Thursday, giving back some of their gains from historic rally seen in the previous session after President Donald Trump announced a 90-day reprieve on some of his, quote, reciprocal tariffs. This is the words from CNBC. Investors worry that even with the slowest pause of some of the duties, economic activity will be slowed by Trump singling out China with a much higher rate. He's put 145% tariff now on China. It keeps going up day after day after day. So the S&P down 3.46%. NASDAQ down 4.31%. The Dow dropped over 1,000 points. And the Magnificent Seven ain't shining today. You had Apple and Tesla down 4.2% and 7.3% respectively. NVIDIA lost nearly 6%. Yep. And Meta fell almost 7%. Again, cumulative tariff rate on China, 145%. And they say that this consists of a new 125% duty on goods on top of the 20% rate levied in response to the fentanyl crisis. He's putting the tariffs on it. Again, I agree with tariffs if you don't have income tax. And I want to tax the rich for what did Buffett say? That he pays more, his secretary pays a higher tax rate than he does? Yes, let's bring the 90% tariff tax rate back to the billionaires and multimillionaires. There were no billionaires back then when they had a 90% rate in the 1950s.
In today's news recap, gold hits a new record as investors seek safe havens. Gold touched a new record on Thursday as the U.S. dollar declined and investors focused on the escalating trade war between the U.S. and China. Gold futures surged as much as 3% to touch an intraday high of $3,193 per ounce before paring gains as traders digested the latest development related to President Trump's tariff policy. On Thursday, the White House confirmed the recently increased tariffs on Chinese goods now stand at 145%, not 125% as previously stated. This follows Trump's announcement on Wednesday of a temporary reciprocal tariff pause on most U.S. trading partners while upping the levies on China. Firstly, policy continues to be made in an utterly random and incoherent nature, wrote Michael Brown, senior research strategist at Pepperstone, in a note early on Thursday morning. This continued incoherence, I guess, should also help keep the bull case for gold relatively solid, too. Gold futures are up more than 20% year to date, making numerous all-time highs along the way amid trade uncertainty and increased expectations that the Federal Reserve will step in with rate cuts this year. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Record share credit card accounts descend into debt as stock market had a good day yesterday. If they look at this from Market Watch, it goes on to say that the fourth quarter, 11.12% of credit card accounts were making the minimum payment, up from 10.87%, and you have an interest rate of over 20%. That's disgusting. Hey, if the Goldman Sachs were Italian, they'd call them a mafia. Want to show you the reality of what's going on. And by the way, in this week's Trends Journal, spotlight, whole section on Trump's tariffs before he made the reversal yesterday. But this is a headline from Wednesday's New York Times, just to show you the reality that you don't know what the hell is going on. And nobody does. Brushing off concerns, Trump pushes forward with his steep tariffs. Oh, he brushed off concerns. That was Tuesday. Brushed off concerns. Nobody's going to stop me. He said, I'm doing this. Facts are all there. And what he said. That was Tuesday. Wednesday, so Thursday's paper, Trump backtracks, pauses many tariffs. What are one of your wild cards, one of your top trends this year? Wild card and trump card. And we said the trump card's going to play the wild card. And the wild card is the Joker's wild. So we don't know. The wild cards are being played. I've been at this for 45 years. I never had a wild card. Never, ever. But I knew it would happen this year. Trump tax pauses many tariffs. And what happens? Stocks roar back, climbing 9.5%. There's nothing like this. The NASDAQ went up 12%. So the highest jump since the dot-com era. And today they're down. So going back to Trump, I mentioned that I had lunch with his brother Robert back in 2017 over in Wassaic, which is across the river from Kingston, east of here. And he went on to tell me that when the father died, I think it was the father died in 2002, he left him over $500 million. So Trump is nothing more than a spoiled daddy's boy. And this is from Abigail Disney, the niece of Walt Disney. And this is an article, you can look it up. It came out just this week in The Guardian. Trump, is her quote, is an inheritor. He never acknowledges it, but he wouldn't have been able to do anything of the things he did without an inheritance. He absorbed the lessons of inheriting money almost unfiltered. You have this money because you're special. If you read about his childhood, it's like the textbook worst way to raise a person. You know, he was very violent. He was a bully, and he was rewarded for that, even as a very small child. And more money he had, the more he exhibited these bad qualities. And the more people told him he was wonderful. This is from the Disney era. So I got to comment her. She does some great things in peace and other things. I then
What's your take on Celente's new outlook? Do you think $3,000 gold is realistic this month, or are there more hurdles ahead? Will central banks continue to gobble up all the gold? It's funny that Gerald Celente has shifted his forecast after being bearish for like 2 weeks, becoming bullish on gold as he sees current market conditions driving prices higher. Share your thoughts and price predictions in the comments. Let's see how this plays out in the coming weeks. Now, watch this video right here because it's a perfect fit for you, and I'll see you on the other side.